classifies income. Then when we go to, section 17, income is classified, and one of such classes of income is emoluments. So when we get to section 17, we have classification of incomes, and emoluments are classified as part of income. Therefore, then we are within the legal provisions to tax emoluments, because taxation is on income, and income, one of the classes of income is emoluments. Then section 2 defines what emoluments are. Section 2, when you go back to section 2, defines what emoluments are. And section 2 defines emoluments as means salary, wage, overtime or leave pay, commission, fee, bonus, gratuity, benefit, advantage, whether or not that advantage is capable of being turned into money or money's worth, allowance, including inducement allowance, pension or annuity paid, given or granted in respect of any employment or office, wherever engaged or held. So we've been given all these items that form part of the definition of what emoluments are. So remember, 14 gives us powers to tax incomes. Then 17 classifies incomes, and part of that classification we've got emoluments. Then section 2 defines what emoluments are. So in this definition, we've got so many items that form up. Some of these items are taxed differently, and probably that's where even part of the refunds arise. Part of the refunds arise from the same fact that we've got so many classes, or we've got so many items that make up the definition of emoluments. So, and when we go to section 71 of the Income Tax Act, remember 14 said, subject to provisions of this act, they shall be charged. So when we get to section 71, now it gives us who's supposed to collect tax from emoluments. So it says, that is subsection 1 of 71 says, on the making of any payment of or on account of any emolument. So remember where we're coming from, and now we've reached the part of how emoluments are therefore taxed. It says, on the making of any payment of or on account of any emolument, tax shall, subject to and in accordance with the regulations made by the minister, be deducted or repaid by the person or partnership making the payment. Notwithstanding that when the payment is made, no assessment has been made in respect of the emoluments. So at this point, section 71 also introduces one item or one provision that I referred to when I was saying taxation of emoluments falls under the Income Tax Act and the regulations that are made. So in this part, section 71 tells us that tax shall, subject to and in accordance with the regulations made by the minister, be deducted or paid. So I also want you to pay attention to two words there. It says be deducted or repaid by the person or partnership making the payment. So from here, we are seeing that employers are given powers, some of which they don't even exercise these powers, because we've had instances where people have over-deducted tax from an employee, and then the employer himself tells the employee to say, you will go and claim this refund from ZRA when the year ends. But section 71 tells us that subject to and in accordance with the regulations made by the minister, tax shall be deducted or repaid by the person or partnership making the payment. So it gives powers to the people who are making payment to either deduct tax or to repay tax to someone they are paying emoluments to. So I want us to get that clear, because we have got instances, like I said, where people have over-deducted tax from someone, and when that person tells them to say, you've over-deducted tax from me, they say, you will go and claim this from ZRA. But the law gives them powers in accordance with the regulations. So the regulations that are in force currently are SI number 50 of 2014, referred to as the pay-as-you-earn regulations. So those are regulations that are in force. So they are the ones that are being used for the administration of pay as you earn. So Section 71 now gives powers to the minister to make regulations, and it is these regulations that are used to tax employees. And these regulations give instances in which tax should be deducted and in which tax should be repaid. I'll read part of that section where it says tax shall be refunded. It doesn't even say may be or might be. It's very definite in that it says tax shall be repaid. So at this point, I think we will not go into detail of the regulations. I just wanted us to go step by step. So because these regulations are the ones that are now giving powers to the employees or the employers rather on how they should deduct or in how they should repay someone from whom they've over deducted tax from their emoluments. So the regulations that are in force, these are not sacred. We can look for them. These are statutory instrument number 50 of 2014, referred to as the income tax or the pay as you earn regulations of 2014. So I'm sure these ones at government printers, we can find them, and they shouldn't cost more than 5 or 10 kwacha. So these can be bought from government printers. They are the ones that are still being used currently. I expect each and every employer to have these regulations because they are the ones that give guidance on how tax shall be deducted and on how tax shall be refunded to an employee. So at this point, then the question may arise, therefore, to say, then how then can a tax refund arise? How then can a tax refund arise? So basically, there are 5 scenarios I can say that can give rise to a tax refund. So like we saw in section 14, when we were just introducing the taxation of income, it says tax shall be deducted in accordance with the rates set out in the charging schedule. So we have the issue of rates. So a refund can arise using wrong rates. So it says section 14 says tax shall be charged at the rates set out in the charging schedule for each charge year on the income received in that charge year. So scenario number 1 that can give rise to a pay refund is where your wrong rates have been used. A good example is for 2021, the rates are different from the rates that were being used in 2020 and the other years. So if wrong rates are used, a tax refund can arise from there. Remember, the mandate of ZRI is to collect the correct amount of taxes. So that's how even refund come about. If a tax has been over deducted, so it means ZRI has not collected the correct amount. So if tax has been deducted, the excess should be refunded to the person from whom the over deduction has occurred. So number 1 is use of wrong rates. So where the employer uses the rates for 2020 to tax 2021 incomes, a tax refund can arise. So number 2 is non-exhaustion of tax bands. So as we all know, taxation of pay as you earn is progressive. We don't have a single rate. Incomes are classified. The first, like for 2021, we are saying the first 4,000 or 48,000, that is annual, at 0%. The next 800 kwacha or 7,200 if it's annual at 25%. Then the next 24,400 at 30%, or the next 2,100 at 30% if it's monthly. Then the excess at 37.5%. So there are instances, remember these rates are annual rates, but they are just divided into monthly rates. So there are instances where one does not exhaust their allowances given in these bands for the annual entitlement. So if they have not exhausted that, those allowances, a refund can arise when we do a recalculation. Remember, taxes is deducted on a monthly basis, but the entitlement is annual. So when we do a recalculation at the end of the year, taxing the incomes at the annual rates, a refund may arise because one did not exhaust the classifications of income as given in the bands. So another scenario number 3 is non-allowance of credits. So remember 14 said subject to other provisions. So there are provisions in the Act that give credits, and one such credit is a credit for those who are differently abled. So basically that is one credit, though we can also term advance income tax for those who may import something and they are charged advance income tax. That can be treated as a credit when you do a recalculation of tax to be paid at the end of the charge year. So non-allowance of credits for those who are differently abled can give rise to a tax refund. The other one is the non-allowance of deductions. So when taxing incomes, like section 14 says, subject to other provisions, tax shall be deducted. So there are provisions that give deductions. So a deduction, first of all, a credit is it is deducted from the tax to be paid. So after tax has been calculated, tax is what we call a credit. Whereas a deduction is an amount that is deducted from the total emoluments one has gotten to arrive at the figure that is to be taxed. So the two are different. So we've got credits and the deductions. So credits, these are removed from the tax itself, whereas deductions, these are amounts that we remove from the total emoluments one has gotten to arrive at the total taxable submitting a claim. So a deduction is different from a credit in that a credit is deducted from the tax, whereas deductions are removed Remember, 71 gives powers to them. And in those regulations that I've referred to, there's one provision or one regulation that says those who are employed part-time, the employer should deduct tax at the highest rate, which is 37.5%. Source of employment, the employer is calling it part-time. So the employer is instructed to deduct tax at the highest rate. So it is of employment is from there taxes to be applied using the bands, and we've got one at 0%, 25%, 30%, and 37.5%. But those who are in part-time employment, the employer is instructed to deduct tax at the highest rate. The rationale is that one has already, because when it's being called part-time, the assumption is that one is in another set of employment, which is full-time, where they are exhausting these bands, which are 0%, then 5%, 30%, and cause any charge year. So when one is classified as part-time, the assumption is that they have already exhausted these allowances. Therefore, where it is called part-time, the employer is to deduct at the highest rate, though they can get permission from ZRA, which they will present to the employer so that they, and also there are instances where one is in full-time and part-time at the same time, but from their full-time employment, they do not exhaust their allowable bands, so to say, because remember, we've got a ban from, like for 2020, we had the first 3,000 at 0%, the next 800 at 25%, the next time employment getting, say, for example, a 4,000. So exhaustion of the allowable bands. So this can be due to one starting employment mid-year or one stopping employment mid-year. So when they're being taxed on a monthly basis, they might not have exhausted their allowable deductions for the year. So stopping of employment can be due to contract ending, due to death, due to retirement, or due to dismissal or resignation. So there are various circumstances that can lead to one stopping employment mid-year. So basically, those are the circumstances that can lead to one not exhausting their allowances, or one having a tax refund due to them. And these deductions, just to say something about deductions, these deductions that we're talking about, for those who are in employment, we've got a deduction for donations to charities and approved by a public benefit organization. So this is where now tithes and offerings for tithes and offerings are related to a public benefit organization or charity. So from this deduction, you can see that if you even contribute, say, for example, to an orphanage, so you are approached by one of the someone who works at the orphanage, and they say, we've got this cause and we would like you to make a contribution towards our orphanage. Provided that orphanage is registered with ZRA and is approved, has got an approval as a public benefit organization, you are able to claim as a deduction that amount that you've contributed to the orphanage, provided the orphanage is registered and provided that amount does not exceed 15% of your chargeable emoluments. So there is a limit to that. That's why even when those who are contributing tithes and offerings, for those who contribute what they call first and second tithe, there is usually a limit. So the limit is 15%. So you cannot, of course, you can contribute more than 15, but when we are doing a calculation, we only limit what we allow as a deduction to 15%. So at this point, I don't know whether there are any questions, clarifications before we move to the practical part of submitting a claim.
So I can't see any hands because, okay, so for just the sake of our taxpayers, so the first part is to take us through the legal framework. And then this second part is to now present the return as it is presented practically. And you'll find that we shall continue making reference to the legal framework as we have discussed it. I saw that on the chat, some people wanted us to share the screen. So this is what we are now moving to. We have a hand from Kenson Monsha. Mr. Monsha, please go ahead with your question.
Thanks, Adrian, and then thanks, Mr. Kazembe, for, I think, for the able presentation. Yeah, I think maybe along the same vein, I was wondering whether there is a presentation that could be shared, because I think when you are presenting, especially regulatory issues to do with acts and regulations, sometimes it's not very easy to publish, maybe follow if you're not seeing what is being presented. And the last was there's a presentation that can be shared, then think it's easy for the participants to follow. But I think so far, so good. Thank you.
Okay, for this part, because it was really the processing part, so I didn't. For this part, because it was really the processing isn't the presentation, and I can prepare one. I think I must have a presentation or two that I've presented before. The end refunds. It may even be more detailed than what I have shared in this session, but I think I'll share it with Adrian, who will later share it with everyone. I think we've got a list of participants and their email addresses, so that can be. I think I'll share it with Adrian, who will later shareable, so to say, for this session to say, and I like getting feedback from the people. Are we on the same page?
Yes, can you get me?
Yes, I can get you.
Yes, we are, Mr. Kazembe.
Is this a Mlengazu? I know.
I should think it is.
You should think it is.
Yes, it is.
All right, okay. Thank you. Robert Livingston, are we together? Okay, probably they don't have a mic or something. Yes, so a presentation will be shared with Adrian, who will later share it with everyone. Probably it will even be a little bit more detailed, which will just detail the various provisions and the legal aspects and the circumstances that can lead to one getting a refund. I must say that as we are going to see, actually, there are instances where one claims a refund, but when we do an assessment, it is found that actually there is even no refund that is due to them, but they are owing ZRA. Also, I should have even said this at the beginning, is that ZRA is not a pension fund, or it's not that everyone who retires or everyone who resigns has some money somewhere at ZRA which is claimable by them. So like I said, ZRA's mandate is to collect the correct amount of taxes. So whether you've retired or you are continuing employment, if correct amount of taxes were collected from you, there is no refund due to you. Or whether you've retired or you are still in employment, if tax was over collected from you, despite you continuing in employment, a refund is due to you. So I must say that refunds are not only for people who have retired, but refunds are for people who have overpaid tax in whatever circumstances the case may be. I think only that maybe refunds for those who've retired are a bit pronounced, because most likely when you retire mid-year, the assumption is that you may not have exhausted the bands, because like I said, like for 2019, we had the first 39,600 at 0%. That is the annual entitlement. So if you are employed, you are getting 10,000, you retire in month 3. So it means you'll have gotten paid only 30,000, and you are being taxed on that 10,000 using the monthly rates. But when you apply the annual rates, remember your 30,000 falls within the 39,600 that is to be taxed at 0%. Therefore, a refund might be due. So refunds might be pronounced in those who are retiring, especially even when we had gratuity being taxed. So people who are leaving employment, we may have different. Like I said, when you looked at the definition for emoluments, the definition of emolument contains several things in there. We've got salary, wage, overtime, leave pay, commission, and all those things. Gratuity is also part of it as an emolument. But now the case is that these emoluments in this definition, these components in this definition are taxed differently, so to say. So in those days, as you retire, you'll be given a gratuity or you'll be given a pension, and part of that pension might be taxed differently, and it may give rise to a refund. But refunds are for everyone, provided they have overpaid tax. whether they are still in employment, whether they've just joined employment, as we have seen. Because if you join employment in September, you get, so September to December, you've got 4 months in there. So if you get 10,000, 10,000, 10,000, and you're being taxed at the highest, I mean, the bands you're exhausting. But when you do a recalculation at the end of the year, we may find that actually the year in which you first joined employment, you overpaid tax and the refund might be due to you. So I just wanted to clarify those points. And also, like I said, part-time employees are taxed at the highest rate. Also, I also want to just we'll show by way of an example, because we've had cases where two people come, one and his subordinate come to submit a claim, but it is found that the subordinate is getting more money as a refund than themselves. And they would wonder to say, then how then is that someone who's junior to me getting less money than I am, who will get a refund higher than myself? Because what we do is we recalculate everything that you got and tax you correctly. And then if there is any excess, that's what is due to you. But there are instances where certain allowances, like we will see when you do the example, are not taxed by the employer. So it simply means that you who was getting more money, you are the huge tank that did not pay tax than the other guy who gets less than you. So when you do a recalculation, to be found that actually the other guy gets a refund higher than yourself. So the practical part and the figures will help us understand that part. So if there are no more contributions, then I'll proceed to share my of the application or the practical part of the payee refund. So let me know if you're able to see my screen.
I can see.
Okay. All right, probably before I even proceed, let me answer one of the questions in the chat. So, because let me answer one question in proceed. Let me answer one of the questions in the let me answer one question in the chat, because it's from there that a question from yes, I can see in the past, can an employee make a claim for how many years? Also a suggestion, please share the SI being discussed. The income tax is public. They've even shared the link. Thank you for sharing that link where some people can access the Income Tax Act. So is this the full act, or this is the just an amendment act? Because acts are amended every time, and I don't think Parliament does a consolidation, but they'll publish the amendment acts for each and every year that amends various sections. So we'll make arrangements also to share the SI for 50 of 2014. So yes, for a bit of the topic, for how many years in the past? So you can make a claim for 6 years backwards, because the law allows us to make an assessment within 6 years. So if it's outside the 6 years, you cannot make a claim, and ZRA cannot assess. Even in normal income, ZRA will not assess you unless there's a case of fraud. that is suspected, that's when ZRA can even assess you 10 or 15 years backwards. But where there is no fraud, just normal assessment, an assessment cannot be made outside it. Because when you are bringing a claim, we have to assess it to verify that that income is due to you. So we follow the same 6 years that is in the assessment rules. It's the same 6 years that we follow. So having answered that, then I would say that for this part of making an a claim, so we've got the first 2 years, which is 2019 and 2020. These you can submit them on our portal. You can go to the ZRA website and log in into our portal and make a claim. But for the other 4 years remaining, you can only submit a manual claim. So you can obtain forms from the ZRA website, or you can walk into a service center near you. They'll give you forms, and then you fill in those forms, attaching the necessary documentation, and an assessment will be done. But for the 2 years, that is 2020 and 2019, you can make an assessment online, or you can make a claim rather online, and an assessment will be done. So for 2021, you cannot make a claim, cannot submit a claim for the year that has not yet ended. So we only assess here for years that have passed. So for the first 2 years, which is 2020 and 2019, you can make your claim online. For the other 4 years, you can make them separately. Just to answer a question that might come, you cannot aggregate the incomes like for the past 6 years into one claim, because remember, the charging schedule says that the rates are given for each year. So even if the rates might be the same for 2019 and 2018, you'll need to submit a claim separately. So each and every charge year will have its own claim, even when the rates did not change from one year to the other. So you cannot aggregate the incomes for the 6 years and then make a claim for 6 years, because the rates are given per charge year and the relief is for charge fees per year. And a relief not exhausted in 1 year cannot spill over into the other year to say, I did not exhaust my 39,600, therefore I'm carrying it forward to the next year. So when you go to the ZRA website and you go to log into the portal, you'll see the screen like this one. So you will need a TPIN and your password. So if you don't have the TPIN and the password, or you don't have the password, you can write to ZRA. They will send you the credentials for you to log in into the ZRA website for you to submit a claim. So when you log in, you need to have your TPIN and the password. So you log in. So when you log in, you see a screen like this one. So on the left panel, you will have your tax online portal there, the ZRA logo, then registration, returns, accounting, refunds, and all those items. So when you want to make a claim, you don't go to refunds. Don't go to refunds, because some people would want to go to refunds. You submit the claim as a return. So you go to returns, and when you go to returns, you go to the option to file a PTT or pay refund, PTT or pay refund. So you select PTT or pay refund. So when you click on that, this screen will come, and when this screen comes, you choose liability. Remember, it was for PTT or pay refund, so you choose the option for pay refund. So when you do that, you need to specify now the period for which you are claiming, or the charge year for which you are claiming. So if you are doing for 2019, we'll go to January 2019, and you click on next. So at this point, this form will come. For those who filled in this form before as a manual form, they will see the similarities in this form. So this is the form now that you fill in. Due to the different kinds of people that may be claiming, we made it in such a way that the only field at this point that is mandatory is the TPIN of the employer. So when you come to claim a refund, you need to know the TPIN of your employer. So you need to give us the TPIN. That one, you have got no option. You need to know the TPIN of the employer. But the rest of these fields, it's an if. I'm not saying they should be left blank. If you don't know how to fill it, underline the if. If you don't know how to fill it, you can leave it blank. provided you have attached the necessary attachments. You have made the necessary attachment, because now a ZRA officer, as they are assessing, they will get the figures from the attachments. But if you are able to fill in this assessment, this form, well and good, you fill in the form, and probably to even give you an idea whether you are owing ZRA, so that you know that you should proceed or not, or if you ZRA owes you. But that is just an estimate, even when you filled in properly, because you may think one field that you filled in is maybe one item is not taxable when it's not, when it's taxable. So that will just give you an indication, because the ZRA officer will still need to do an assessment based on the documents that you have attached yourself. So the tipping of the employer is mandatory, and the bank details as we proceed, you'll see. So let's say we are filing a return for one who knows how to fill in this part, and they will tell us that they had a salary of 55,000 kwacha in the whole year, that is 2019. If they will say this is the tax that they paid as the salary. Remember I said I want to demonstrate a part where two people come to make a claim. One is even more senior than the other, getting more money than the other, but it is found that the one who gets less money has got a higher refund than the other. Also, I would want to demonstrate a case where one is in full-time employment and part-time employment, and how a refund can be due to them in such circumstances if they are not exhausting the bands from their part-time employment, if they are from their full-time employment. I must quick to mention that if you are a full-time employee and you are doing part-time, and from your full-time employment, you are already exhausting all the bands into the highest band, a refund cannot arise due to you being a part-time employee somewhere, unless any other reason, not for the fact that you have a part-time job. So if this person would say this person had a transport allowance of 8,000, which they did not include on the application, but an assessor, as they go through the documents, they will realize that actually this person got a transport allowance for the year amounting to 8,000, and they include it in the assessment and see how the story can change from there. So look at a case where this person is differently abled and they are claiming for a refund due to the employer not allowing them the credit of for those who are differently abled. So when they go to, they'll fill in that part, and they'll now come to this part where they'll, okay, let me just move slowly. So for those who would want to fill in this part, remember, so those things that I was mentioning in the definition of emoluments, you can see that they are here. And emoluments, we've got taxable or non-taxable. So there are items, there are emoluments, but some may be taxable, some may not be taxable. So like in the case of salary, it's taxable. Leave pay, notice pay, settling in allowance, bonus, other allowance. This is where transport allowance may come in, repatriation, accrued service bonus, ex gratia. Then you've got contract. Right before 2016, when gratuity was taxable, but after 2016, the amendment of the 5th of January 2016, when the constitution was amended, it made a pension benefit to be non-taxable, and the pension benefit is, in its definition, also includes gratuity. So this, for one who's been dismissed or resigned, they may get all these items. Redundancy, these are the emoluments that they may get as their last emoluments. Early retirement, death, retrenchment, medical discharge, lump sum. Then we've got deductions. So we have deductions for subscriptions to professional or technical education. So if you've made a subscription set to Zika, and you are working as an accountant in your job, and that subscription has not been paid by your employer, you have paid it yourself, you can make a claim as a deduction, and a tax refund may be due to you. So donations to to charities or PBOs, this is where now tithe falls in. So like I said, the limit that is given in the law for a deduction is 15%. So if you return tithes like those who returning what they call first and second tithe, so probably you will return 20%, some even if they are returning in excess. So when you say in this case your tithe 1,100, okay, just that it was 11,000 rather, you see that the system will limit it only to 15%. So you'll have deduction that will be given to you will only be 11,000. So for those of you who are preachers, you can even use this to encourage your flock to be contributing more than 10%. You can see what belongs to Caesar and you God what belongs to God. So you can realize that you can see that Caesar actually recognizes that you return more than 10% to your God, isn't it? That's why Caesar even gives you an allowance of 15%. So let me remove this so that I demonstrate something. So you will see that here under here we've got what is called total chargeable emoluments. So we've got a grand total here. So a deduction, like I said, a deduction reduces chargeable emoluments. So when we put, so that is the base upon which we calculate tax. So when we put the 11,000 here, so we are allowed an 8,000 chargeable emoluments is reducing to 46,750. So a deduction reduces the chargeable emoluments, whereas a credit, as we are going to see, reduces the actual tax that is to be paid. So in this case, we are not going to demonstrate this, but we'll still come back to demonstrate how a donation to charity can give rise to a refund. So at this point, we are looking at two people who are differently abled. So one says they had a salary of 55,000, and they had a salary of 55,000. Therefore, the tax that we're supposed to pay is 4,140. Probably this is what we even reflect on the payslip. So when we now give a credit for differently abled, which is here, credit for persons with a disability, which is 3,000, you realize that the 55,000 remains as it is, but the tax due remains, the tax due changes. Now, we need to introduce tax that has already been paid as per payslip so that we come up with a refund that is to be repaid to the individual. So you see that in this case, according to the system, it will tell us that the tax that is to be refunded to the person is 3,000, which is exactly equal to the credit for persons with a disability. Now, when ZRA will do their assessment and find that actually this person, apart from the 55,000 that they say got as salary, they still got a transport allowance of say 8,000. Therefore, they still got a transport allowance of 8,000, but the tax deducted did not change. It still remained at 4,140. We'll see that the dynamics here will change in that this figure, the total chargeable emoluments, will change. So the employer may have overlooked the transport allowance or may have not taxed the transport allowance, but when ZRA do their assessment, transport allowance is taxable. And we'll see that if we are to add the other allowance here, which is 8,000, so this will see that the total taxable amount now changes. The grand total is 63, and the total taxable amount after allowing the total taxable amount is that much. Therefore, the tax that is supposed to be deducted is 6,540. That is before the credit, but only 4,440 was deducted as per payslip. Therefore, the refund that will be due to this person is 600. I hope you can see that that is the 600. There is a minus there. So the minus 600 tells us that this person is a refund is due to this person. Let me just zoom in. So there is a minus there. So minus, okay, the minus is not getting bigger. So this, it means that their refund, despite them, because some people will expect that because they are with a disability, because they have a disability, they only 3,000 it will be due to them. But when ZRA does the calculation, they will calculate what is supposed to be due to them, and then against what they paid. So they only paid 4,100 before allowing a deduction, when they're supposed to have paid 6,540. In that case, it reduces what they're supposed to, because there was a part of the emoluments that they did not pay tax. So now let's compare it to a case of one. So both were getting transport allowance, but both of them did not pay. So let's now reduce it to some. I hope you've taken note of the 600. So let's take an example of one who was getting 50,000. So remember, you can see here, someone was getting 50,000 the whole year, 55,000 rather, and the transport allowance of 8,000. Now let's look at one who was getting, who got 50,000 the whole year, and the transport allowance lower than the other, and we see how much refund will be due to them. So in this case, it will show, we'll see that on the 50,000, the tax already paid in this case will be, if the 50,000 was taxed correctly, the tax already paid will be 2,000, that is as per payslip, 2,640 kwacha. And when we give them a credit for being differently abled, which is 3,000, okay, let me just start afresh. So now I want to demonstrate a case of where one, remember that one was 55,000 as salary and 8,000 the transport allowance. Now I want to show a case of 50,000 as salary and 5,000 as transport allowance. So they will have gotten their salary of 50,000. So that will be the salary. And they will have a tax already paid of 2,640. And when we introduce a credit for 3,000, now when ZRA does the assessment and finds that actually this person had a transport allowance of 5,000, a transport allowance of 5,000, we'll realize that actually a refund due to them will be 1,500. So you can see the difference. one who got 55,000 as salary and 8,000 as transport allowance had a refund of 600 because the 8,000 transport allowance was not taxed. So this is common for those who don't tax other allowances like transport allowance. There's those other allowances that do not, well, which they do not tax when they should be taxed. So when ZRA does the calculation, what ZRA does, it doesn't just say, okay, when you're looking at the card, you are due for refund because you have a disability. No, we established whether first of all, whether you paid the correct amount of tax. So it is a comparison of what you paid against what you should have paid, giving you whatever credit is due to you or giving you whatever deduction is due to you. So you realize that actually this person who got a 50,000 and also had a 5,000 transport allowance, which did not pay tax, with them they'll get a 1,500 as a refund. Whereas the other person who got 55,000 and 8,000 the transport allowance are only getting a 600 as a refund, and therefore they will start questioning to say, how come someone who gets less than me gets a refund that is higher than a refund that I'm getting myself? The reason is that you had a higher chunk of income that did not pay tax. So when we tax it, it will chew part of the credit that was due to you. Whereas the other one, they had a small chunk, so their underpayment in the first place was smaller than yours. So when with a higher amount than yourself because you had a higher amount that did not pay tax. So that is how a refund will arise, and that's what will give differences to the amount taxable. So like we said, so you can make a claim that has got multiple claims in it. Like in this case, there could be a disability. They could also be donations. So if you say what you donated to your church was 10,000, for example, you retain tithes and offerings for 10,000. You see that limit is that, and okay, on tax already paid, the credit, okay. So in this case, against that, and tax already paid. So, okay, this must be just because the expectation is that the tax refundable should increase when we give this deduction. I think it's just a system bug at this point. But anyway, I just wanted to demonstrate that you can make a multiple claim. Okay, so let me just start afresh, or let me demonstrate with figures that are above the taxable amounts on how you can make a claim that encompasses everything. You can have a disability at the same time you're retaining tithes and offering to a church. At the same time, probably you made a contribution, you made a subscription to Zika, and probably imported a vehicle and you charged the AIT when you were not supposed to. So let me just start afresh and demonstrate that. So let me use an amount like this one, 84,000. So on the 84,000, tax already paid should be 13,560. But now if we say on this same 84,000, you retained tithes and offerings of 16,800 because you retain first and second tithe as it is called. So you see that the allowable deduction that will be given, it will be limited to 15%, like I said. At the same time, you made the subscription to Zika of 5,000 as annual subscription. And at the same time, you have a disability credit of that much. And the disability credit, by the way, the system already knows the limit. So if you put an amount more than 5,000, 3,000, the system will refuse for you because The system knows that for the charge year 2019, the disability credit allowable was only up to 3,000 as the limit. So it will limit it to 3,000. So if you paid AIT of 10,000 and then on tax already paid, you've got 13,560. The refund that will be due to you will be 16,000 as it will be 16,000. That will be the refund that will be due to you. So these items will give rise to a refund, such as donation, because this donation and that one will reduce the total chargeable emoluments. Remember, you got 84,000. So your employer taxed you on the 84,000 because before that, the employer would not know that you are going to retain your tithes and offerings. So they cannot tax you minus the offering. So they tax you everything. But when you now bring proof, we'll see when you go to the attachments part of what you need to attach, you see what needs to be attached. So when a recalculation is done, it will be found that the amount that's supposed to pay tax is, so by the way, I want you to notice that when I remove this one, I don't know why the system is not updating. When I remove that one, the amount, this 16,000, I wanted it to reduce because I don't want it to confuse it with, okay, allow me to start afresh because I want to demonstrate something. Because what ZRA refunds, ZRA does not refund the tithe or the offerings. ZRA simply does a recalculation, removing that tithe and offerings that you paid as a deduction before we apply the tax. So you realize that actually the refund that will be due to you is not exactly equal to the amount that you contributed as the tithes or offerings. The refund will be different. So I just wanted to demonstrate that when you contribute tithes and offerings, you should not expect a refund that is equal to the amount that you contributed, because ZRA does not refund tithe. Like some people may understand, and in some cases, they even say, no, I cannot claim because tithe is payable to God or is returnable to God, whatever notion you use, therefore I cannot claim. No, ZRA does not retain tithe, but ZRA only allows that as a deduction. In short, what Caesar is saying is, I'll tax those who are returning to their God differently from those who are not returning. So I don't see any point where someone should say, me, I cannot claim, because it is Caesar who has said, me, I'll tax them separately. So what ZRA is refunding is not the tithe itself. But what ZRA is saying is that component of the tithe should not have paid tax in the first place. Therefore, we are doing a recalculation. So in this case, so let's put the 16,800 here as the tithe that you refund, you retained. So even if you reduce this to 12,600 here, if we say that tax already paid in this case is 13,560, you will see that the refund that is due to you is 4,500, not the 16,800 or the 12,600. The tax that will be due to you is the 4,500, which is simply the component of tax on the 16,000 that you retained, because that component paid tax when it was not supposed to pay tax. So I don't know if there are any other questions at this point before I demonstrate how one was in full-time employment and part-time employment, and they are not exhausting their bans from the first employment, can have a refund due to them. So I don't know whether there are any comments. Adrian, you can help me. Because of my screen, I can't see the hands in the hands from the participants. Adrian, you can help me at this point. Are there any comments, clarifications before we demonstrate where one has got a full-time employment and a part-time employment, and they are not exhausting their bans from the full-time employment rather? Okay, there's a question. Does it matter if one tithes on gross pay or net pay? Does it matter whether one I don't know whether to say it doesn't matter or it does, but the question, the answer is, if you are getting the same amount of money and you go to the same church and you are returning tithes and offering, one is returning on the gross rather, the other one is returning on the net. So the refund that will be due to you will be different, in that the other one who is returning tithes on gross, they will return a higher chunk and therefore they will have a higher deduction than you. So remember, the tithe that you contributed will be treated as a deduction. So it means if, say, for example, you both got 100,000. So one returned on the 100,000. So they were returning, say, let's just say they were returning 10%, which is 10,000. Then the other one, assuming the net pay is 80,000. So they are returning on the so they are returning 80,000. So one will have tithes and offerings as 10,000. The other one will have 8,000, which simply means when we are now doing a recalculation, one will give him a deduction as a 10,000. The other one, therefore, the 100,000, what will be taxable will be 90,000. Whereas the other one, when we give them 8,000 as a deduction, what will be taxable will be 92,000. So when we apply the bands there, so the amount of tax refunds that will be due to the people, to the two individuals, will be different, in that one who returned on the gross will have a higher refund than the one who returned on a net. I think that answers the question arithmetically, that is. So will this recording be shared? Yes, it will be shared. Okay, so apart from the tipping, which other mandatory, okay, so we have not yet gone to the part of the mandatory documents. We'll show that the proof will be on the payslip from here. So that's that, okay. So the 55,000, is it gross pay? Yes, that 55,000 is this. In this case, we'll say it's the salary because the gross pay includes the transport allowance of 8,000, but they omitted the transport allowance. So they themselves will have just put 50,000 either on the manual form or on the system. But when an assessor now does an assessment, looking at all the documents they will have attached, they will see that actually, apart from the 55,000, there is a transport allowance and probably other allowances. Say, for example, housing allowance, because we've got institutions that don't tax housing allowance. I made a claim in February this year and I've received a message that my claim has been approved in May. On this same day, I received a message reading tax online message, the tax online payment, 0 successfully processed. Okay, I'll explain this later. I think I've exhausted those from the chat box. So on the attachments, we are just on the first part. I wanted to demonstrate the various scenarios before I go to the next part of even the bank details and the attachments. So we'll talk about the attachments when we reach that part. So we'll talk about even the bank details. I'll also talk about this, but I'm just grossing through so that I show you. So there is this part of attachment, and we'll talk about attachments according to what circumstances has led to a claim being, a refund being claimed. So we are still on the first part. So I hope I've answered those questions from the chat box before we go to, if there are any hands from the participants. Adrian, are there any hands?
No, we don't have any hand at the moment. So we can proceed.
Okay, we can proceed. So remember, I said I want to demonstrate a case of a part-time employee, and on a part-time, if what is giving rise to a refund is being part-time, There is no disability involved. There is no tithe offering involved. There is no subscription involved. You want a refund on account that you have a part-time employment. Maybe just as a quick comment to say is, if from your full-time employment, you are already over and above the highest band, which is 37.5%, provide correct taxes were deducted from you, there will be no refund due to you on account of you being in part-time employment again, because the assumption that you've already exhausted the band that's has already held, because that's the reason why it is said that those who got part-time employment should be taxed at the highest rate, because they have already exhausted their allowable relief in the bands from the first employment. So a refund can only arise if, one, part-time employment is your only job and you are being taxed at the highest rate, and you did not get permission to give to your employer to say they tax using the graduated bands, or from your first employment, you've not exhausted the bands, but your second employer, who is the part-time employer in this case, deducts tax at the highest rate. That is the only time where tax can arise. So let's demonstrate that part, how tax can arise because of being in part-time employment. So before we do that, I want us to go to an Excel sheet so that I want us to let's look through this Excel sheet together so that we appreciate. Are you able to see my Excel? Or you are still seeing the ZRA
Yes,
return?
not yet.
Okay. Let me share my Excel sheet so that we are you able to see my Excel sheet now?
Yes.
Okay. So let's take a case of someone who gets paid 5,000 from their first employment, and then they have okay, let me even reduce it to 4,500. Let me reduce it to 4,500. So we've got this person. They have they are working as say a teacher. They teach accountants. They are getting 4,500 as the gross pay. Then they have got a teaching job at one of these colleges or A levels or whatever it is, where they are teaching accounting, and they are getting paid 2,000. So the instruction is that the second employer, who is the part-time employer here, they need to collect tax from them at the highest rate, which is 37.5%. So from their 4,500 as the first employment, this is how they will be taxed. So the first 3,000 will be taxed at 0%. So the next 800 will be taxed at 25%, which gives 200. Then the next, I wanted to reduce it to what? Let me reduce it to, so the next 900 will be taxed at the next 900 will be taxed at 30%, which is will give tax of 2,000, a tax of 270 kwacha. So their total emoluments will be 5,000. Okay, so let me reduce it. I want to reduce it to 4,500. So the total emoluments that they will have gotten is 4,500, isn't it? So this 4,500 will have paid a tax of 320 kwacha as tax. Then they have got a second employment which gives them 2,000. And now the instruction to the second employer is that they should tax them at the highest band, which is 37.5%. So 37.5% of 2,000 will give us 7,750 as tax. So they will have gotten the 4,500 from their full-time employment. And when that 4,500 is taxed, the tax that they're supposed to pay is 320 kwacha. And when we tax the next one, which is from the part-time employment, the tax they're supposed to pay is 750, because the employer from the second job, that's what they've been told to tax. But now remember, this person is not exhausting their relief given in here, because it's supposed to have been the first 3,000 at 0%. That's why tax is 0 here. The next 800 at 25%, 200. Then the next 2,100 at 30%. Then the excess is the one that is now supposed to be taxed at 37.5%. But from their first time employment, from their full-time employment, they are not exhausting that relief. Then from their second employment, because it's part-time, the employer has been told to tax at the highest band, which simply means that this person, according to the payslip here, so they will have a total income of 4,500 and 2,000. So this one gives us a total of as their income per month. So we have got 6,500, isn't it? So that will be the total. So it would mean in the year they will have gotten paid a 78,000 as income. So the total monthly, we've got 6,500. Annual income, they've got 78,000 on the 6,500. But the total tax that they pay per month from the two employments, we've got the 320 from the first employment and the 750 from the second employment, giving us a total tax of 1,070. 1,070 per month. So 1,070 times 12 months, it gives us total tax in a year of 12,840, isn't it? I hope we are following. So now when this person now comes at the end of the year to make a claim to ZRA, remember, like I said, there is no disability involved. There is no tithe and offerings. Probably this person doesn't even go to church, and they are not differently abled. They did not import, they did not contribute any, they did not make any subscription. So they just want to make a claim to ZRA on account that they've got a full-time job and the second job, which is part-time. And because from the full-time, they are not exhausting the bands, then the second employment is taxing them at the highest rate. Let's now go to see from the ZRA side, if at all there will be a refund due to them on this account. So I want to take note of the two figures. So we've got a 78,000 as the total, as the gross emoluments that they got. And then we've got a 12,840 as the tax that they paid from the 78,000. Yeah, that is adding the two. Now let's go to ZRA and see if when now they make a claim with ZRA, if they are going to have a refund due to them. Shall we? Adrian, just confirm that there are no questions before I proceed, because I don't want to lose people. I don't want to leave anyone behind.
Excuse me. I have one question. I just shared a link to the ZRA homepage where the calculation of pay as you earn is showing. And under the writer, how tax is calculated, it says that the first 4,000 instead of 3,300 is being tax-free. And then the next 800, yeah, as you said, 25%, and then that 30% and so on. But instead of 3,300, on your homepage, it is showing 4,000. I've shared the link in the comment box. Maybe you could quickly comment on what is the actual free amount. Thank you.
Okay, thank you for that clarification, which I think it will address everyone's who may have the same. Yes, I'm using 3,300 because that was the rate that was prevailing last year. Because remember, we cannot demonstrate a tax claim for 2021 because 2021 has not yet ended. But as you will be doing claims for 2021 in 2022 or years to come, we'll be using 4,000 for 2021. So the 4,000, the first 4,000 is for the year 2021. So for the previous charge years, which are 2019, 2020, the ones that we're looking at, it's at 3,300. There were even years which were when it was lower than that. So for the years that we are using to demonstrate our claim, which is 19 and 20, the bands were at 3,000. So that is what we are going to raise. So as we listen to the budget at the end of October, as we have been promised, probably it might be raised, who knows? So the bands may be different. So for the year 2021, yes, you are right, it's 4,000. And then the rest have remained the same. So those bands can change. So it's either the first band can change, and even the actual bands, as you can see, 8,800 still remains the same. The 2,100 remained the same, and the excess. So there can even be a change where even the actual bands, like say, for example, it's increased the first 4,500 at 0%. Then the next 1,500 at 25%. So the bands can change in that manner. So when the changes happen, the change can happen to the actual bands, or but in this year, there was only an upward shift of 700 kwacha. So I hope that answers the question. So employees for NGOs such as UN organizations susceptible to taxes such as pay. Yes, they are susceptible to pay, only that some employers may not be mandated to collect the pay as you earn from such employees. Therefore, the employees themselves need to account for their own tax from the emolument. So on the ZRA system, we have got a return called pay direct employment. So even when you go to tax type to the website under registration, you can add that account so that you yourself, you'll be accounting for your own taxes, because there are some organizations, those that have got a diplomatic immunity status, they are not mandated to deduct tax from you. So the employees themselves, those who are employed, those Zambians who are employed there, who are the ones who need to account for their own taxes, because there are some employees over there who are there who may not account for their own taxes because of also having them a diplomatic status or something like that. But for the Zambian employees who are employed in those organizations, they need to account for taxes themselves. So they need to apply for a pay direct account, as we call it. So if there are no more questions, clarifications, let me get back to this. And I want you to note those two figures. So we've got the 78,000 and the 12,840, because these are the figures that we are going to use. And then we'll see if there will be a refund at all due to this employee. So when this person who was working for this, who was earning this from the two employments, now comes at the end of the year, comes to ZRA to claim a refund on account that they had a full-time employment and where they were not exhausting the bands, and the second employment where they were being taxed at the highest rate. So they will claim as usual. So let me share the screen again. So let's go back to the website. Can you see my screen? Can you confirm that you can see my screen?
Not yet, not yet. That yes, now we can.
Now you can. All right. Okay. So now let's proceed to sign in. So this person will sign in into the ZRA website as usual. So they'll go to returns, they'll go to pay or PTT or pay. They'll specify the charge. They'll specify that they are doing a pay refund, and then they'll go ahead and specify the charge here they are doing for 2020. So this window will come. So at this point, you'll notice that we only have one tip-in for the employer, but this person was working for two organizations. So this change will need to be made so that for those who got more than one employer, they will need to indicate the tip-ins of the two employers. But for now, you only indicate one employer. But when it comes to attachment, you will need to attach the pay slips from both employments. So if you're a part-time employer, I mean you're a part-time employee and you're not being given pay slips, you should demand for those pay slips because those pay slips may help you one day or the other day. So, but when it comes, so you just indicate the tip-in for the first employer. You will not indicate the tip-in for the other, but on the pay slip, you need to indicate and you need to attach all the necessary attachments so that we've got everything that needs to be used for assessment. So let me just delete this. Yeah. Okay. Today is the 15th, 2020. Okay, so I wanted to delete this so that we start afresh. Okay, let me delete this. So like I was saying, so this person had two employers, the first one and the second one. So we'll make a change so that we include the tip-in for the second or probably even the third employer. So, but now when it comes to filling in or when it comes to attaching, you need to attach all the attachments from the pay slip and all the necessary documentation and even probably a contract from the second employer so that we know that you're a part-time employee somewhere. So in this case, when it comes to salary, you now need to enter the salary from both employments. So even if you didn't feel like I said, this part is not mandatory. You can proceed to file this return without filling this part. Now, as a ZRA employee, we need to add the two salaries. So the addition of the two salaries gave us 78,000, isn't it? So we arrived at 78,000 as the salary that this person got from both employers, employer one and employer two. So he has no any other allowances, no any other deductions, not claiming for a disability allowance and the like. But all they want is a refund because of being in second employment. So, and the tax already paid, how much did we calculate? I teach, sometimes I like feedback from the people. How much did we calculate?
$12,840.
12,840. Thank you. So we calculated it 12,840. So that is what we will put. Either you as a person making the claim or the ZRA employee or assessors. So we calculated 12,840 as the tax. So this is what will be indicated as tax already paid. And how much refund are we being given? So we are being told that this person will have a refund due to them of 1,530. So you realize that here there is no disability involved, there is no donation to charity, there is no subscription, there is no AIT. But when you do a comparison, because now the system, what the system has done, the 78,000 has been taxed as one, applying the bands of 39,600 at 0%, the next 720 at 25%, the next 24,000 is it 25,400 at 25%, and the excess at 37.5%. So when we do a calculation of that sort, we are told that actually what this person is supposed to pay on the 78,000 kwacha is supposed to be 11,310 kwacha, but they have already paid 12,400 and 12,840. Therefore, the difference, which is 1,530 kwacha, is a refund that will be due to them. This, when you look at it, so employer number one was doing the right thing. They were following the bands, and the employer number two also just used the instruction you given to them to say, when you are a part-time employer, you need to tax them at the highest band. And because of the two, this is emanating from the fact that, remember, the first employment, they were getting 4,500. Even the band at 30%, they were not even exhausting it. So they still had some income that was supposed to be taxed at 30%, what was not being taxed at 30%, which was being transferred to be taxed at 37.5%, which simply means that part of that 2,000, what was being taxed at 37.5%, was supposed to be taxed at 30%, because the band that was being taxed at 30% was ending at only 400 kwacha, if you remember that Excel sheet that we shared, but it was supposed to be 2,100. So we still had 1,700, what was supposed to be taxed at 30%, which was being transferred to be taxed at 37.5% by the second employer. I don't know if there are any questions before I move out of here, so that we just talk about bank details and attachments before we call it a day. Are there any questions up to this point? Any clarifications before we move now to the last part of our return on how you're supposed to fill in this return? Adrian, any hands? Let me just check them. Can you do a claim when you are still in employment? Yes, you can do a claim when you are still in employment, provided you are claiming for the year that has ended. So like, I'm still in employment, but then I realized that actually I was overtaxed in 2017. I can still do a claim. But when I realized to say my current employer is overtaxing me for 2021, I need to go to the employer so that they do the right thing and even probably refund me. There is a possibility, like I said, under Section 71 of the Income Tax Act, which I read, it says that the one who is making the payment is supposed to deduct or repay. So when I realized that my employer has overtaxed me from January up to August, and I approach them, I show them to say, Bwana, you are still using first 3,300 when the law says 4,000 for 2021. And the employer acknowledges that provided the year has not yet ended, the employer should do a recalculation. And if it is found that they have overtaxed me up to this point, they themselves are supposed to give me a refund because the law empowers them to do so. So because Section 71 says on the making of any payment of or on account of any emolument, tax shall, subject to and in accordance with the regulations made by the minister, the regulations which we are saying, this is SI 50 of 2014. So the tax shall be deducted or repaid by the person making the payment. So when that mistake is noticed within the charge year, like for 2021, if I notice that this employer is still using first 3,300 instead of 4,000, meaning they are overtaxing me, I can go to them, and when they do a recalculation, they themselves, provided the year has not yet ended, they should refund me themselves, not tell me to say, wait for the year to end, you go to ZRA to make a claim. No, that is wrong. I hope I've answered this question. Can you make a claim when you are still in employment? Yes, you can make a claim provided is for the year that has ended. So you don't need to wait to leave employment for you to make a claim. So like I said, refunds are not only for people who are leaving employment because it's not a pension. It's only that probably the issue of refunds are more pronounced or they are more likely when one is leaving employment, especially if you leave employment mid-year. But if you leave employment, you are the contract ending in December and you leave employment in December and your employer was taxing you correctly and your terminal benefits are taxed correctly and everything, there will be no refund due to you because the correct thing has been done. So for AIT and subscription to a provisional body, a claim is also done at the end of the year. Yes, they are also done at the end of the year, provided it's within the same year. AIT is done at the end of the year, and even professional body also is done at the end of the year, attaching the necessary documents. And what documents are required. So for the professional body, you need to attach the receipt itself, and also you need to probably attach your raw profile, because if you are an engineer who is working as a receptionist at a hotel and you pay EIZ subscription, so that subscription has got nothing to do with what you are doing, and that deduction cannot be allowed because you need to pay for a professional body that is in relation to what you are currently employed at. So if you're an engineer, you pay your EIZ subscription, but you are currently working as a cook or as a receptionist at a hotel, that deduction cannot be allowed. Adrian, any hands before we go to the bank details and attachments before we close?
I haven't seen any. So
Okay.
we can.
All right. So I'll proceed to the second part. So the second part is just for you to give us the bank details. So the banks are already preloaded on the ZRA system and their branches. If there's a new bank or a new branch, which is there, you can contact ZRA. And the account, we are saying only Kwacha accounts are applicable. And these accounts, the configuration is that it has to have 13 digits. So if your bank account is less than 13 digits, you may get in touch with your bank so that they tell you how they configure their bank details to reach their bank account to reach 13 digits. So that is the only part about bank details. Then the second one is about nominee. This is where probably you want the money to go into a different person's account, not yourself. So you need to fill in this part telling us the details of the person whom you want to receive the money. So this is applicable most likely to people who are deceased. So the claim will be done in the deceased person's detail steeping, but you want the funds to go into the administrator's account or one of the beneficiaries from their estate. So you fill in these details so that they are the ones. Next part is just about attachment. So this is a guide on what you need to attach. So across mandatory, a payslip is mandatory for all the cases. Like that one for one who was in part-time employment and full-time employment, you'll see that the only details that they needed to attach was the two payslips. But then the other parts, so for employees leaving, there will be certain forms that will be needed, like a cumulative payslip, the P13, computation of terminal benefits. Then for disability, also a payslip a payslip applies across the board. So for the NRC and the disability card, because if you are differently abled, there's a card that they are given. These people belong. You need to belong to a certain. So you need to go and register with a certain organization. I think it's Zambia Association of People with Disabilities. They give you a card, so you need to attach that card. So donation is the public benefit organization, also payslip, national registration, and original receipts. So be it tithe receipts or a receipt to an orphanage. So for AIT, you need to attach copies of the CE20, that is the cost of the receipt, the payslip is also there and everything. So across the board also, you can only be refunded if you are paying taxes. Because in the case of a disability, if you are already below the threshold, you may not even be so no tax is being deducted from you. Therefore, the credit does not apply to you, because the credit only applies to those who are supposed to pay tax, and then that tax is reduced by what is reduced by the credit. So that is about attachments. So this is what they need to attach. So for the subscription also, you need to attach the receipts, and probably the assessor, if you may need to get in touch with you just to verify that that subscription you've paid has got something to do with the nature of employment you are engaged in, because you can't pay for EIZ, like I said, but you are working at a hotel as a receptionist or as a cook. So that is about attachments. And I might say that this section will soon change, in that for those who will be filling on section part 1, because for now the system is only expecting a pay slip from you. But to help people, because there are instances where someone is claiming for a disability refund, but they will not attach the pay slip. I mean, they have not attached the disability card. So the system, we are going to change it such that the system will be smart, in that the moment you put in the disability, let's say you are claiming a disability credit, the attachment of the disability card becomes mandatory. The moment you claim AIT, the attachment of the Form CE20 from customs becomes mandatory. The moment you say you had made the donation to a public benefit organization or a charity, the receipts to support that also become mandatory. That is about attachment. So that part will change it soon, so that the system will know. But still more, like I said, the first part is not mandatory. So all you need to put is the TPIN. So you can leave the rest blank if you don't know how to fill it. But the ZRI employee assessor will fill it in for you. But when it comes to attachments now, it's up to you to read what is required. So this guide will still be there, even when the system becomes smart, such that if you do not put the first part, you still be guided to say, quite right, you have not said, you've not put any figure under disability, but on your claim, there is a card and everything. So you need to attach that, so that the assessor has all the necessary documents that you will help with the assessment, so that your assessment is not delayed. So I think that is it from me. From the chatbot, can I follow the progress of my assessment using the ZRA portal? I think Adrian, you answer that one. I don't know how far the issue of checking process, that is the querying of any process, not just a refund, any other process, if it's now working on the ZRA website. I mean, not say yes or no to that. So are there any questions up to this point? What of disability claim? Can you claim it monthly? Okay, good. I like this question, which I overlooked. So, like I said, Section 71 gives powers to the minister to make regulations, and these regulations are the ones that should guide the administration of pay as you earn. And when it comes to these deductions, like I said, these same deductions and credits, those that can be given at payroll, should be given at payroll by the employer. Only that there are certain deductions that cannot be given, like donation to public benefit organization. We cannot give it at payroll, because you pay after fact. After you've received, that's when you return. So at the making of emoluments, the employer will not know, even when they know that you're a staunch SDA. They don't know. They are not 100% certain that you are going to retain your tithes and offering. Even when they know that you refuse to go to work on Saturday, but they may not be sure that you retain your tithes and offerings, so they cannot do that. So those cannot be given by the employer, but certain deductions, like a credit, like a disability credit, the employer is given specific instructions that, provided this person has provided a card, they need to give them the credit. So for the credit, actually supposed to be claimed monthly, it's supposed to be given monthly rather, by the employer themselves. They don't need to wait. We had cases whereby someone is telling this person or differently, about to say you can only claim at the end of the year. That is wrong. This is supposed to be given by the employer each and every month as they are paying out the emoluments. So that is the employer who's supposed to to give that credit for those who are differently able, provided they've provided the cards and proof to the employer that they are differently able and they are members of the Zambia Association of Persons with Disabilities. I think that answers the question about the disability.
Okay,
Adrian, the querying of status, is it working on the ZRA portal?
well, not at the moment. What is happening mostly is that they can always just follow up with us. At the moment, we are yet to get feedback from the developers, so that the taxpayers themselves can go to the status and check. But what has been happening is that they can always just email us, send the reference number, and then we'll be able to check it from back office and then give them the status. Suffice to mention that the payee refunds, like has been earlier mentioned, you apply for assessment. So it's not a guaranteed case that there is always a refund for you. In some cases, and in many cases, you discover that when an assessment is out, you discover that you paid the correct amount of taxes, and we usually inform you in that regard. So it is always very important that once you apply, you remain patient. We have made a commitment that within 45 working days, we can complete the assessment and give you an indication whether there is a refund for you or not. Then after that, should we indicate to you that there is a credit for you, then there are other processes which now will follow in order to establish whether indeed you qualify for that. And once that is established, you are then put on a list of people that are to be paid. It is on first come, first serve basis. Should I mention that again, this is dependent on the availability of funds. We get funding from central government for refunds. So it's not, because I think the information which is out there is that from the taxes that we collect, then we must make refunds. No, it is not like that. Once we collect the taxes, they are submitted to central government. And that again, if we are to make any refunds, we have to make a request from central government to fund us for that. So the payment rate and how fast we do that is dependent on the amounts that we are receiving for such purposes and the number of applicants that we have that have been put on the list. So we usually just encourage our taxpayers to exercise a lot of patience, as long as they have given us all the banking details. We certainly send the money into the accounts. So that is what is happening. Very shortly, of course, we shall communicate as to when this is implemented by our developers, so that our taxpayers are just able to log into their account and and check the status on their own. Yeah, so we shall communicate, I think, through our social media platforms and also the website, and through our communication channels. So that is what we can say. Unless there are other questions, Okay, I don't see any hands. We've been here for almost 2 hours now. Yes, so I should just thank all of you for coming. And I should also thank Mr. Kazembe for this presentation. Thank you very much that you found time to present. At this point, I will just ask Mrs. Denise Antonio to close our meeting.
It's been a mammoth. Thank you so much, Kazembe. Thank you so much, team. And thank you so much to you, the participants. We hope you had an insightful session, and we look forward to more interaction with you on our website. As you may aware, we post different subjects, and we hope that you will take advantage of this opportunity. And our platforms are available to you to send your comments, your queries, or your concerns. We are there on LinkedIn, we are there on Instagram, we're there on Facebook, as well as on Twitter. So feel free to get in touch with us for any concern that you may have. And you can also access us via email. Our email, I don't know whether it has been posted on the chat box. Adrian, please, you can send our A4 mail. And we look forward to having a productive day for all of you, and have a blessed day. Thank you so much.
So you are free to leave the meeting. Thank you very much.